Okay, guys, thank you to all of you who just watched the live budget reaction with me. That was great. Sorry about the sound problems at the end. So here I am. Hopefully a few of you will turn up here quite quickly. So I'm going to give my brief overview reaction to what happened in the budget. So number one reaction to that budget is that there were no big unexpected shocks. Great, glad the sound's fixed, thank you. There were no big unexpected shocks in that budget. They've done a very careful drip feed of leaking out their plans to the media over the last week or not. And what they have achieved with that budget, I think, is calm markets and stability. So without making any political observations on anything they've talked about, just purely looking at it from how it's going to affect the housing market point of view, I think that any sustained stability and calm in the mortgage and money markets is only good for the housing market's prospects to continue functioning. Having said that, do I think anything that he said is going to make any difference to what's happening to house prices now? No. I think that what you will see now is a slight increase in the number of mortgage products returning to the market, because there was that big reduction. We lost, I think, 60% of all mortgage products over the course of this year got removed after the mini budget, Kwasi Kwarteng's one. And I think you'll now start to see lenders being able to make more confident predictions on interest rates and therefore products. I think the risk premium is going to come down. And so mortgage rates are going to settle somewhat. Now, that doesn't mean that they're not going to go up if interest rates, if the Bank of England interest rates continue to go up. And I'm going to come on to that in a minute. So I think that from the point of view of housing market functionality, the ability for the housing market to function and operate, that budget was good, simply because it's promoted stability, not insofar as that the people are going to be liking it or not liking it, but insofar as the money markets are going to be basically saying, thank you for putting some calm and order back in. Okay, so I think the FTSE, sterling, gilt yields, there's a very muted reaction. There's almost no change. I think gilt yields are slightly up, but very, very small amounts. So this is the money market's initial reaction is, okay, no big surprises, nothing we're worried about. We're carrying on as we were before, pretty much. And that's going to, I think, the mortgage lending market has been waiting to see the money market's reaction to this autumn statement. Now, there's an awful lot of detail in there to unpick about the dates and the timings on the spending pledges, the tax, the effect. I mean, there's a long, long list of things that he's announced, right? With tax changes, with budget changes, with corporation tax, with inheritance tax, with timings of when things are going to start, when spending's going to happen. So it will take even the best and fastest economists quite some time to process all of the budget intentions that he outlined in that statement, okay? And my most immediate reaction, and I've had a very quick message with my quant guy, Alex. Hi, Alex. And I agree with him on this. I think there's going to be a gradual, muted, slightly negative reaction. Yeah, it's going to be a relatively small reaction either way. No big reactions from the money markets. That is a good thing. Purely from the point of view of the housing market, that is a good thing. Now, what do I think about the steps he's taken insofar as limiting the effects of a recession, employment, that kind of stuff? I need more time to process that. There were no big shocks in there. There were some perhaps slightly positive things people weren't expecting, investment in schools and stuff. But the numbers he talked about sounded big, but in percentage terms, they're less than inflation. So I don't think there's any like real Brucey bonuses in anything he said from many people in there. There is some support, extra support for means-tested people, means-tested benefits and stuff. So there's some additional payment for the most vulnerable he's outlined. So I think, again, my knee-jerk reaction to the effect of that budget on the economy and on people's cost of living is that it sounds quite good. Some of the things that he said, it's going to make it's not going to stop things being really quite bad. It might make them slightly less bad for the worst off, possibly. So no major shocks on that either. I still don't think, he didn't say we're going to stop recession. He basically said we're in recession. I think the OBR forecast for 2023 is now minus 1.4% growth. I think I heard him say. So that's basically saying, yeah, there's going to be a year-long recession next year. So from a point of view of housing, I don't think anything in that budget statement changes my feeling about what's happening to house prices. If anything, if there's any change at all, they may not slide as fast. Whether they slide as far as I still predicted, the 35%, it depends. Whether or not I change that figure after I've had a chance to process all of the effects of this budget will depend on how much I think his measures that he's outlined are actually going to help stimulate the economy. There was one thing he mentioned in there that I wasn't expecting, that I got to go and quantify it, but he talked about a reduction in national insurance contributions for the smallest businesses. Now, I don't know how big that reduction is, but that sounded like a good thing to me. But I need time to process just how big a deal that will be, if anything at all. So let's just quickly break this down for the sales market and the lettings market. So for house sales, I think that it might help stimulate a few more mortgage products back into the market. So helping the people who do need to buy to actually get a usable mortgage product. And it may well be a positive, small, not a big positive, but a small positive in helping people get moving again. But it's not going to make a difference on prices, because nothing that he said there is going to have a big impact on interest rates, because inflation is the highest it's been for 41 years. And in his budget statement, he said that the OBR does not forecast inflation to come down until the end of next year. And so I am still seeing the Bank of England raising base interest rates a little bit further. And although some of that might be factored into mortgage products, it's still going to nudge them up a bit if that happens. So I still see mortgage rates. The best case scenario is they're going to kind of stick around where they are now. The worst case scenario is they are going to creep up a bit as interest rates creep up. It's all going to depend on how big the Bank of England base rate increases are in their future meetings, okay? But overall, not much change from how I felt before. On balance, it was neutral, I think. It was just neutral overall on balance. There's no shocks. So what does this mean if you're a buyer? My position hasn't really changed from before the budget, which is that if you need to buy, do buy now, just don't overpay. If you can afford, if you can comfortably wait, I think there's going to be better value properties, a lot better value, a lot more choice as well. So never mind prices, I think it's going to be easier to find a home you really want to buy if you can wait a few more months before you start looking, for people who want to move sooner rather than later. If you're someone who's in no hurry and is waiting for the bargains, then I still think there's a good year's wait. If you are a seller and you need to sell, in other words, you don't really have much choice, but for whatever reasons, life reasons or financial reasons or fixed rate mortgage coming to an end reasons, whatever those things are, I urge you to move sooner rather than later. Do not be one of these sellers that we've already seen, I put them on Twitter yesterday, chasing the market down every month. And obviously already those people wishing they dropped it more at the start to get a sale. I think that right now, I think the Mexican standoff, I think the sellers are starting to lower prices, but the bids are falling faster than the asking prices at the moment. And that's not going to catch up until at least the spring of next year. So what do I mean by that? I mean, I don't think sellers are going to start really lowering prices enough for transactions to pick up until the middle of next year, approximately. So if you are upsizing, happy days for prices coming down. Take your time. I think if you're upsizing, although waiting to sell your existing home means you'll get a lower price for it, you're also going to get your new home, if you're upsizing, will be at a lower price as well. I'd be in no hurry to upsize. But if you're downsizing, move sooner. That's what I'd say. Right, onto the rental market. Okay, so the first observation to make on that budget is his comment about social rent. So the mechanism that was in place put social rent up by inflation plus 1%, which would have meant that next year people in social housing would be looking at 11% rate increase. So it's obviously good that they haven't done that and that they have changed that and they're reducing it down. But still, 7% increase in people's rent in what's going to be the toughest year for people for 40-something years is going to still be a very difficult reach. That's going to be hard and tough and bad, and it's also going to put downward pressure on the economy as all of those people have even less money to spend on food and energy. Now, I think the rent prices are extremely localized, okay? I think that there are more than in sales, right? That it's very much dependent on, is it a university town? What are the big employers like in particular towns? Are these employers people who are going to be insulated from recession or more affected by recession? So that kind of difference is going to affect the rental market. You know, are the biggest employers in a town or a city going to be ones that are strong throughout the recession or weak? That's going to affect rent prices in cities. Okay, so I cannot make any overall observations on rent prices. There are still places where, especially I heard in Shepherd's Bush, for example, there are still queues of people waiting for every property that comes to the market in London at the moment. So for people looking to rent now, it's not going to get any easier anytime soon if you're in high demand places. I mean, that's an obvious thing to say, right? But I do think that once the recession is biting as hard as it's going to, then you may see an improvement in rent prices. Now, there are a number of other things that may affect rental prices. For example, landlords deciding whether to stay in the market or not. That's going to be affected very much by their mortgage. If their buy-to-let mortgage comes to an end of a fixed rate, can they afford to stay? Some landlords are going to be forced to sell. It's not a case of if a landlord's mortgage goes up so much that they just whack up the rent, they're going to get it. You know, people don't have unlimited budgets to pay for rent. It will only support what the market supports. So it's very, very difficult to, you know, we don't know what every individual landlord's situation is as far as their mortgage is concerned. And so you've got the variables of what is it, does the landlord have a mortgage or not? If they do, is their fixed rate going to last throughout the recession or not? If not, is the increase going to be something that they can afford to swallow with the rent they're getting? If not, are they going to put the rent up? Are they going to get the rent or not? There's a whole long list of uncertainties for every individual buy-to-let landlord. And it's very, very difficult to predict what's going to happen on that. But in the medium to long term, I do see rent prices easing. But let me wrap up with this observation. Because at some point in the next 2 years, there's going to be an election, isn't there? I think, there's going to be an election. And all of these housing affordability issues are, at the root cause of them is a shortage of affordable homes. And until we, the British voting public, decide to make house building the defining election issue, then the problem won't go away. Until we force our politicians to understand that all we care about is more affordable housing being built so that more people on low incomes can have a nicer place to live, or a place to live, let alone a nicer place to live, so that at the next election, whoever's going to build the most houses is the party that gets voted in. Until we, the British voting public, force that as an election issue, this problem is not going to go away. So if you're watching this and your rent's too high, vote for more homes to be built the next election. If you're watching this and your kids can't afford their rent, vote for more homes to be built the next election. There is no other measure that will solve this problem. Of course, it doesn't solve it soon. I mean, there are no short-term solutions to this problem, right? There are no short-term solutions. rent caps backfire. They don't work. If they did work, I'd support it, because nobody wants young, hardworking people to have no money left over after they've paid their rent. Parents don't want that. Grandparents don't want that. Nobody wants that. So unfortunately, rent caps just drive landlords out of the market. And in order to have affordable homes to rent, you need landlords. It's just a fact. It's an unavoidable fact. So in my mission, my stated mission of a home for everyone, one of the things that's got to be achieved is faster house building. So guys, I'm going to wrap this up here. Just a quick recap. Nothing in that budget makes an immediate large difference to the housing market, in my opinion. The best thing about it is that I think the increase in money market stability, that stability allows the housing market to function, and for people, builders and agents and everyone that works in the moving industry can now make better plans because there is some stability. That is a good thing. On the rental side, I think a 7% rise for social rents next year is going to be tough, but not as tough as it would have been if it was 11%. There are no short-term solutions to the rent shortage and high rent prices. So guys, thank you for watching. Send me your questions, okay? Twitter, moving_Charlie, or Moving Home with Charlie on Facebook, on Instagram, on YouTube, on TikTok. Send me private questions. And if you're a first-time buyer looking for a mortgage, I'm now working with two fantastic mortgage guys. They were on my live stream last night. Go to my website. I'll put up the screen quickly. It's mhwc/. Okay, and sure, there we go. Go to that URL. I'll also put it in the description below. If you want me to put you in touch with these mortgage brokers they are my hand-picked Moving Home with Charlie mortgage guys, right? And I'm going to be looking for people's feedback on their experience with these guys. My gut feel about them is that they are people who care about their customers, and by using them for your mortgage, you'll be supporting me in this channel. So I hope you do that if you are looking for someone to talk about mortgages. And remember, if you are looking to buy, talking to a mortgage broker first is always the best way to get agents to take you more seriously. Thank you guys. Have a great one. See you on the next video. Have a great day. Bye-bye.